Great news from the world of reverse mortgages. There is a brand new proprietary reverse mortgage that's just been released that's lending to higher loan amounts than anything else on the market. That means any other proprietary reverse mortgages and any other HECMs. So what we're going to do is very briefly, we're going to go through it. We're going to take a look at a sample at I think 400,000, 700,000, a million, and 2 million, and we're going to compare the HECM versus the regular proprietaries versus the brand new proprietary. So come along with me on this journey. Again, it'll be quick, but I want to give you the information because if you're looking for the maximum, the most amount of money that you can get out of a reverse mortgage, then this is going to absolutely make you happy. So we're going to get off of me here real quick, and we're going to go to my little slideshow here. And let's see here. This is just contact information for me. If you'd like to reach out, you can see my information is flashing below. But my name's Jason Eichmiller. I own and run Key Home Lending and Reverse Mortgage Reality. And I've helped a little bit over 460 seniors since 2008. So this thing never pauses. It's so weird. But yeah, here's, if you go back one, then you can see our website, www.reversequotes.com. If you want to plan to have a conversation, pick out a time to chat. Or you can call me at that 888 number that's flashing below, or email me at jason@keyhomelending. And then on the website, Reverse Quotes, you can see I've got a bunch of letters and testimonials and interviews that I've done with folks who have gotten reverse mortgages with me over the years. And this thing still is not pausing, but we're going to roll through it anyway. Here's a bunch of letters. Again, if you want to read these in depth, go ahead and just push pause and you can read through them. Or you can email me or ask below for testimonials. Glad to share with them. Okay, enough about that. Here is the most important slide in this whole stack here. What I did was I took, although you have to be just 55 to get a proprietary reverse mortgage, you know that that 62 is, well, you probably know that 62 is the minimum age for a HECM, but for proprietaries, we can go 55. I just picked out a random age here, 75. So you know what? I didn't even do 400. I just did 700,000, a million, and 2 million. So you can see that at a home value of 700, the HECM is returning about 267, 268, again for a 75-year-old. The old proprietary is getting less. So when it was a question of a HECM versus an old proprietary, if you're looking to max out your cash or your potential cash, then you're looking at a HECM. But now check this out, new proprietary. 305, almost 305. That's 60, 77, 87, 90. So that's $38,000 more or so. That's 15, 20% more money that you can get from a proprietary than you can get from a HECM. Let's look at a million. So a million, the HECM's still winning over the old proprietary. You got 385 versus 369. But look at this new proprietary, 443. That is a drastic step up. That's almost $60,000 if my math's right. And I'm doing this on the fly, so my math probably isn't right. Then we go to a home value of 2 million. Now the HECM doesn't return too much more because the HECM has a maximum maximum home value of 1.209 million. So even if your house is worth 2 million, 3 million, 5 million, the HECM is only going to give you the value of 1.2 million. That's why when you have a more valuable house, almost everybody, unless you're looking at a line of credit or monthly income, almost everybody's going to choose a proprietary. But look at this, old proprietary 740, the new proprietary is giving $160,000 more than the old proprietary. This, my friends, is an absolute game changer. So this is why I'm so happy to share this information with you, because this is absolutely going to change. It changes the retirement game. Because when you can take so much more money out of your house, that could be the difference between just squeaking by and really thriving in retirement. Or maybe in some cases, maybe your mortgage is too high to get an old proprietary or a HECM, but now you can get a new proprietary without bringing cash to the table. So again, I'm so bullish and so excited about this new program. Now let's just take a step back real quick. And some people might be asking, well, okay, the new proprietary is giving more money than the HECM, but then is there an advantage to a HECM? Like when should you choose a proprietary, and when should you choose a HECM? So we'll go over for that information right now. And this isn't all encompassing. These are just kind of the bigger points that I see. So there's more out there. And if you have any questions, you can comment them below, or you can always reach out to me. Again, call me, email me, or visit Reverse Quotes. But proprietary, we already went over it. You have a younger age to qualify. It's 55 instead of 62. If you're looking to max out the cash that you can get, or you need all the cash right away, it's the new proprietary, 100%. Now, if your house is worth over 1.209, and again, you don't want to get a line of credit and you don't want monthly income. You just say, hey, my house is worth a lot. I want as much cash as I can get, and I want it all now. Then the new proprietary is perfect. And then low income but high credit score. A lot of people don't know this, but reverse mortgages do qualify you based on, it'll show me for a second. Reverse mortgages do qualify you based on income lightly. We don't look at credit score, but we look at characteristics. But when your income, I have this happen when I've got somebody with a pretty high value home, but they're getting a reverse mortgage because they just don't have much coming in on a monthly basis. If your credit is high enough, if your score is high enough, basically you've done the right things over time. If your score is high enough, then we can actually do a proprietary reverse without even without even underwriting your income. When you have a HECM, no matter what it is, we're always getting your income documentation because HECM is FHA. All right, back to this little this slide here. I wanted to talk to you for a second. So the HECM, where does the HECM fall in? What's the advantage of doing the HECM? Well, you have credit line growth. So basically, anytime you want to be really creative with a reverse and you know you don't need to absolutely max out the cash day one, then you've got to look at a HECM. So credit line growth, I get a lot of folks who are free and clear or don't have much of a mortgage, and they're doing okay now, but they want to see what they can do to get a line of credit, have it grow tax-free over the years, and take it in 15, 20, 25 years. That's one reason for the HECM. Monthly income. Monthly income's another reason for a HECM. The proprietaries don't do monthly income. There is a credit line proprietary reverse mortgage. I do a few of those, but if your house is worth 1.1, 1.2, 1.3 or less, and you're looking at a line of credit, generally the HECM is stronger for the line of credit than the proprietary is. And then finally, retirement safety net. And a retirement safety net can be both. It can be a proprietary or it can be a HECM. The HECM just allows you to be a little bit more creative with it, you can get a combination of cash up front, monthly income, and credit line growth. Whereas the proprietary is great within its box. It's going to give you the most money that you can get. And well, the new proprietary is going to give you the most money that you can get, more than anything else. And it's going to give you all the cash right away. The one thing with the HECM, and I know I'm giving you a lot of information here, but it's important. The one thing you got to know about the HECM is if you're free and clear or you don't have a big mortgage on your house, the HECM is going to stagger the money that you can get. So if we go back, let's go back to this example here. All right, let's say you have $1 million house and you're getting a HECM. So you can get 385, 485, and you're free and clear. Well, with the HECM, these are rough numbers, but you'll get somewhere around 200, 250 right away. Then they're going to make you wait a year for the extra money. So just know the HECM kind of staggers the money that you can get, where again, the proprietary in this example, $1 million home value, the proprietary is going to give you 443, and it's going to give you the entire 443 right away. So I just wanted to highlight that difference. So niches, whatever you want to call it, where would you use a proprietary reverse? Home health care. A lot of times with the home health care, it's so expensive you need to get all the money right away. Fund a business. Maybe you can make it with a HECM, but again, if you want to use this to buy a business or inject quite a bit of cash into it, then you're going to want all the cash. So again, the proprietary makes sense. Home repairs, yeah, you can get by with a HECM maybe, or maybe it's a proprietary if you need more money. So you can see a theme here. These niches to use a proprietary when you need more money in the first year. Eliminate high balance unsecured bills. Buy an investment property. If you're looking to buy, again, let's go back to this example. If you're looking to buy, say, a $400,000 investment property, or say even a $300,000 investment property, and your house is $1 million, you would think, okay, $300,000 investment property, I've got 385 to work with. But again, with the HECM, you're not going to get all the money up front. So you'd probably get closer to about 250 right away. and that would leave you about 50 short. Whereas this one, the proprietary, again, you're getting that entire 443. So that means you are now a cash buyer because you'll be able to take 300 from that 443 that you're getting and buy that investment property. And again, need more than $300,000 immediately. Okay, that makes sense. So that's all I've got. Here's my contact information. I just wanted to come to you today because I'm just when news drops about reverse mortgages, I think I'm probably the first one to share this information with you on YouTube. But a lot of it's been, hey, the economy's bad, there's been tariffs, all this negativity. It's an absolute breath of fresh air. When you get a new program with higher loan amounts, that's basically good for everybody. So that made me really, really, really excited to share with you. And I think you can see my excitement. You can sense it. So again, my name is Jason. This is my contact information below. If you'd like to reach out just to see if you can qualify and how much money you can get, feel free. You can call me at 888-309-9705. You can email jason@keyhomelending.com, or you can go to www.reversequotes.com, and I'll just throw my contact information. By the way, this is my beautiful family. This is my wife, Bridget, Alyssa, my 15-year-old now. Jason's 13, Molly's 11. Yeah, they're absolutely awesome, and they're the reason why I work so hard. So, all right, thank you so much for your attention. Thanks for allowing me to help, and if you need me, you know where to reach me. Take care of yourself.